My wife and I have several accounts with one broker, RSP, RIF, TFSAs, trading accounts, US and Canada. How should I approach sector allocation? Thanks, Jeff. So I have to be careful here to give you advice, Jeff. I don't know your personal situation, but I guess the answer would be, first off, if you were like a prospective client coming to me, Tanya, what would we ask?
Well, first, before I even start talking about sector allocation, first, I would actually talk about asset allocation. So I know I'm not answering the question, but you can't put the horse in the cart in front of the horse. So a lot of that is going to depend on the different accounts, and in terms of sector allocation, well, one thing that we can say without really knowing your situation is diversification is going to be key. So of course, I'm not giving very good answers here, but I think I'm giving
but we have
answers.
To be careful, right? I would find out, like, how did you react in 2008? How did you react in 2020? How did you feel in 2022? How did you feel in August this year when the market fell 12% in 2 weeks? If your exposure is 100% stocks, that could be tough to stomach. How did you feel? The answer is I was fine. I always have 100% stock. Great. Maybe we're dealing with a kind of a max growth, but maybe it's a 60-40 portfolio. If it's a 60-40 portfolio, we believe in alts. I've talked about this before. We have less volatility than most in our portfolios because we have alternative asset class, much like pensions do. We manage money like the largest endowment funds on the planet, and they have an allocation to private real estate, infrastructure, farmland, music royalties, storage, all that stuff that is agnostic to what happens in the stock market. I would say, do you have any of that? Then with respect to sectors, your fixed income, if you own fixed income. Yeah. And then you go into sectors. You don't want to avoid, like, I don't know. I would definitely own some growth. You cannot avoid that. And if you're avoiding growth, you're doing yourself a disservice, because those are the companies that are growing their earnings at the fastest rate. Yes, they're trading at a higher multiple, but you want to be on the side of the momentum trade. Definitely part of your assets.
We have to be careful with sector allocation too. Sorry to interrupt you, Rob, but you've got to be careful with sector allocation too, that we're not getting into a situation here where we're speculating and actually, trying to somehow game this or to time this. And for, obviously you do want to have different sectors. You want to have, some value, some growth, and everything from, retail and financials and technology and, commodities. You kind of want to have a little bit of everything. But how you would approach that? Well, a lot of that is going to depend on your specific situation. It's going to depend on, your risk tolerance, all of that. But yeah, you really have to be careful when you're kind of digging deep on there, because here's the thing. If you don't get the overall allocation right, just like the parts that are, that are going to have the most impact on your portfolio, on, your experience as an investor, like whether or not you're sleeping at night. So I would focus first on making sure you're sleeping at night, making sure that you're kind of in the right overall allocation. And then once it comes down to kind of sectors, my advice would be to avoid speculating on sectors necessarily. And you can make some smart moves by trying to have some diversification, but be very, very careful about saying, oh, well, this is happening in the economy, so I'm just going to avoid this whole sector, or I'm just going to go all into one sector. That's something that we would say is a red flag.